Okay, first off, how many of you have heard of the CFPB? Okay, a very small amount of you. All right, now, anybody know what it stands for? All right, it's a four-letter word. Consumer Financial Protection Bureau. There's something about acronyms, and I've always tried to avoid them because as soon as I say an acronym, I have to make the assumption you know it. But this is what everybody is talking about, the Consumer Financial Protection Bureau. And if you were watching the news, you've been hearing a lot about lenders and title companies and very important people going down to Washington, D.C. right now saying, we're not ready for all of these changes. Can't you please delay enforcement of it? And many years ago, when they changed the HUD 1, they did what they called delayed enforcement. And at the time, you might remember they added the good faith estimate into the HUD 1. And they gave everybody a little time to get used to that new form. So yesterday, they went down again and they had hearings and they said, can't you just delay it a little bit longer? And what do you think they said? No. Why? I feel like I'm dealing with my 10-year-old or my 14-year-old. But no, they're not going to delay enforcement of it. And if you're a lender or a title company and you have not been actively preparing for August 1st, that's the official date, then you're not going to be ready, at least not easily. And that's one of the things Matt and I are talking about today, is the importance of being ready for it and the importance of you having a partner that is ready for these changes. So, by the way, what they said was, according to the news that came out, they will be sensitive to lenders that make a good faith effort to comply with the new mortgage disclosure rules. What do you think sensitive means? I don't know. I've never heard of the government being overly sensitive, but let's just say I don't think I'd want to be the one that made the mistake. Fines can be as high as $1 million for non-compliance. Title companies and lenders, we're all subject to it. So let's jump right in. Okay. First, the CFPB. And just to give a very little, tiny, boring piece of information, it was created by the Dodd-Frank Wall Street Reform Act and Consumer Protection Act of 2010. Why did they create this? Well, remember back in 2007 when everything was beginning to crash? We went into our Great Recession. Well, they really had to look carefully at what was going on and determine what do we need to change to improve things. So they came up with the idea that we're going to set up a new organization, okay? And you probably have all heard of RESPA, right? Okay, we all always talk about RESPA and whether something is a violation of RESPA. The HUD 1 is promulgated by RESPA. All of the organizations like RESPA are now falling under the CFPB, the Consumer Financial Protection Bureau, okay? So what did they decide? They said, we need to make sure that if you're a borrower, and they call borrowers consumers now, you need to know what you owe before you close. And that's why you see over here, know before you owe being the main driving force behind everything that they're doing. The CFPB is such a massive organization. It's not just governing real estate. It governs credit cards and many other financial products. So you're going to see the impact of this in many different ways. But for you and I, who live in the real estate world, we're the ones that have to deal most directly with the hot area of it, which is what are they going to do to protect the consumer? All right, and if you look in the bottom corner there, you can see that the CFPB decided that in order to protect the consumer, they would take a bunch of forms and they would combine them together and make them easier to read for people. All right? Have any of you ever gone to buy a car? Raise your hand. All right. Do you know that really, really long form they give you that has all the numbers on it? They can't even print it on a regular printer. They use a dot matrix printer. Remember those? Okay. So this is called TRIB, okay? And what is TRIB? It is a combination of the Truth in Lending Statement, the HUD 1, and the Good Faith Estimate, all combined together into what looks a little like that form that you look at when you buy a car. The only difference is it's going to be 5 pages. When you leave today, if you want to grab a copy of the closing disclosure, that's what they called it, that's all 5 pages combined together. You take the HUD-1, which was 2 pages, you take the good faith estimate, you take the truth in lending disclosure, and you add it all together, and they created that new form, and many people refer to it as the CD. Now, for those of you that have been maybe listening to music back in the day, remember what a CD stood for? I still think compact disc. Some of you may be thinking of certificate of deposit, but today we're talking about a closing disclosure. So like I said, it's going to combine all of this information together. Now, I'm not going to actually have it up on the screen today, but that I will be delivering a program on that at RAPD. But the main thing you need to know is this. The closing disclosure, the first page of it is going to be the new loan estimate. And the loan estimate that Matt's going to talk about, that they give out to their borrowers, is the same thing that we're going to see in the CD. The truth in lending disclosure and the good faith estimate combined in there, and you know what else? Your information. The last page of the CD is now going to have contact information for all of the parties. They're going to have your name, your phone number, and your license information will all be in the CD. How many of you think of that as a good thing? Come on, nobody? This is your business card. All right, this means that 5 years from now, when they can't remember where they put your number, if they pull out their CD, your information will be right there. So that's a good thing, right? Okay. What's the downside to it? There's going to be an expectation that you're going to be familiar with the closing disclosure. So when does it go into effect? August 1st. That's not going to change. Does it apply to cash transactions? What do you think? No, you're right. Because this is all about borrowing money. So it does not apply to a cash deal, it does not apply to a commercial transaction, and it does not apply to a line of credit. But it does apply to all standard residential loans. Okay, so I have a slide here called the role of the real estate agent. I put a bunch of bullet points together because the real question is going to be, how is this going to impact you, right? Because your buyers and your sellers are going to be asking you questions about this. And the biggest change that we're going to be seeing is that unlike the HUD-1, which we can give to people moments before closing, and is that really a good thing? No. I mean, do you really want to go to closing not having seen the breakdown for anything? Of course, we all try to get HUD-1s out early, but under the new regulations, lenders are now going to be responsible for preparation of the CD. Up until now, who prepared the HUD-1? Right. The government is saying, no, not anymore. From now on, we're putting the burden of responsibility on the lender. Thus, that's why the lender stands to have the greatest liability here. And when the lender takes ownership of that, they need to make sure that they have the information from me at the title company, and from you, anything that's going to impact that closing disclosure, because that closing disclosure needs to be mailed out a minimum of 3 days prior to closing, which, depending upon whether it's being sent by email or US mail or FedEx, could extend it to as much as 7 to 10 days to ensure that we get it to them timely. Now, the lenders actually can delegate the responsibility of preparation of the CD to the title company. Do you think they want to do that? Well, you would think they would, but all of the major lenders have come out, like Chase and Bank of America, and they said, we're going to handle that, which means that there's going to be an expectation that they get the information from you and I well in advance, so when they send that CD out to the borrower has plenty of time to review it and get it back in time, because if they don't review it timely, guess what's going to happen? We're not going to close on time, and I'll give you a little tiny piece of information coming with the Florida Bar contract. How many of you use the Florida Bar, Florida Realtor contract? Okay, the majority of you. That contract is going to be changing. I'm on the subcommittee for changes to the agreement, and probably in July, we're going to see a few significant changes, and the big one is going to appear in guess which section? The closing date section. Would you like to hear what it might sound like? All right, I thought you might, so I brought it with me today. But I can't give you a copy of this, because we don't know if it's really final yet. But this is just kind of to give you a little bit of an idea. This is going to be very, very helpful for you. Okay, so what does it say? According to this, you can have an extension on the closing date due to Consumer Financial Protection Bureau guidelines, and that the closing date shall be extended for a period necessary to satisfy CFPB requirements, provided such period shall not exceed, and at the moment, they're looking at a 10-day extension. So that means that if for any reason that 3-day period can't be met, then your buyer would not be in default because that provision would pick up. Now that's a good thing for buyers because they avoid default. And in a way, if you think about it, now this is me speaking as an attorney, I don't like contracts going into default real quickly. I would much rather see the deal closed, and when you have technical reasons that push people into default, that really doesn't benefit anybody. Okay, it's hard enough to get a buyer and a seller together. So this kind of a change will help support keeping the agreements going. But then it comes back to you. So let's just take a quick look here. All right, so what do you need to know? Well, you need to make sure your customer is aware, and that means buyer and seller, that there's a 3-day delivery requirement if your buyer is getting a loan. And if it's not met, for any reason, the closing date will not happen. Now, assuming they have that provision in, there'll be a built-in extension, which will help. What else? Alert the parties that a closing date may be delayed for compliance. Same thing. Encourage your buyers to work closely with their lender. Needless to say, if they tell you, you know, I'm thinking of going on a vacation a week before closing, what do you want to tell them? No, don't do that. Just like you want to tell them if they say, I think I'm going to go get a car to celebrate my closing. All right, anything that can change, and Matt's going to talk a little bit more about that, but these are the things that will impact whether we close timely. Contract addendums, okay? When I teach real estate, I'm always going over what you should or shouldn't do in addendum. You have a new thing that you need to think about, which is, let's just say you're working on a repair issue. Before you start adjusting the purchase price or doing anything that might impact the appraised value or the loan product or anything in that vein, you need to check with the lender and the title company. A simple contract addendum could completely throw things off. Last-minute changes to a closing disclosure are going to be a little bit tricky, all right? What else do I have here? Keep your title company and lender informed, of course, of any changes. And be prepared to speak confidently and knowledgeably about the forms. You'll need to come to a separate program where we'll walk you through the whole CD, but it's really not that bad, and some of it is even easier to read, okay? And lastly, I have, leave sufficient time for closings. This is another change that you're going to need to think about. The day of a 30-day, the time of a 30-day closing right now is really not realistic. And I think NAR just came out and they're recommending 45 days. And that's actually what I've been saying is that a minimum, you want to add in those additional 15 days because this is all new to all of us. And until we get used to it and figure out where our issues are, you don't want to put people on a 30-day time frame, ideally. And if you do, you certainly want to have a conversation with your lending and title partners to make sure that everybody can meet that deadline. Is that helpful for you? Okay? All right, great. I'm going to come back one more time, but I'm going to take it from here.
Thanks. All right, thank you, Henry. Okay. One word that we need to start getting comfortable with, which is consummation. Yes, that's the new word and the new term for closing for the CFPB. And consummation. Okay, so consummation is when the consumer, the buyer, becomes contractually obligated for the credit of the loan. So that's the closing as we know it. The consumer must receive and acknowledge the CE, the closing statement, what we know today as the HUD, 3 business days in advance. Now, those 3 days include Saturday, they just don't include Sunday and any legal holiday. So 3 days in advance, the consumer, buyer or borrower, needs to receive that closing disclosure. Revisions to the closing disclosure. The fear was, what can set us back another 3 days? And the answer to that is if there's any material change to the APR, the annual percentage rate by 1/8 of a percentage point, so if it goes up or down, that would trigger a redisclosure, and the borrower, the consumer, would have to wait another 3 days. In addition of a prepayment penalty, if the lender added a prepayment penalty to the loan, and a change in loan product, any of these three require another 3-day wait period. Now, the good news is the reality is these changes are very unlikely to happen. So I really wouldn't be too concerned, because at that stage in the game, we typically have all this ironed out to begin with. 1 day before consummation, what can change? What is going to postpone us 1 day? And the reality to that answer is any type of material change. So, for example, if you're doing a walkthrough and there's an issue with the home and you need some type of seller closing cost concession, or you're going to reduce the sale price, that would postpone us 1 day. So any material change to the closing disclosure would hold us back to additional days. The question just becomes, how do we prepare for that? Do we do a walkthrough the day prior? We want to keep one thing in mind. If we do that walkthrough at, let's say, 4:30 or 5 o'clock, and there is an issue and we have to make that reduction, that information, of course, has to have a signed addendum, go back to the lender. So ideally, we'd like to get that in as early as possible. So I'd really encourage everyone to do their walkthroughs early in the morning to figure that out and have that information up front. Okay, so I put a little slide here together, and the question just becomes, how can you as a realtor be proactive with your current mortgage partner? Folks, now more than ever, this is essential. And the more that we communicate, the more that you embrace your partner and learn a little bit more about their process, it's going to enhance you. And we'll start off with one. First and foremost, make sure your realtor, for a whole host of reasons, has a thorough and extensive pre-approval process. They gather all the items up front before finding the home. Because what happens is that even if they sound great and the client is A+, the reality is if you execute that contract, if you gather these items post-execution, it's going to just bleed into your days. And remember, every day that we lose is going to add to the back end of your closing. So make sure your partner, for, of course, all types of reasons, has a thorough pre-approval process and they gather everything right up front before finding the home. Make sure your lending partner has electronic capability. Believe it or not, there are some lenders that still work via FedEx. You can imagine if you're FedExing the loan documents to the lender or to the borrower or consumer, now as we know it, we're going to lose a day. And then they have to FedEx it back. That's 2 days. It's 2 days that you would add on to the back end of your closing. So make sure they have that electronic feature to communicate back and forth with the consumer. Appraisal delivery time. When my team and I sat back and did a closing calendar, we looked at everything and what are the realistic timeframes in order to get you at a 45-day closing or less? And the answer to that is you really need appraisals to be delivered within 8 days or less. Have that conversation with your lender up front. Know those timeframes if they exist. And that's on the assumption that you want to close in 45 days or less. The biggest hurdle is understand your partner's loan commitment delivery date. That, by far, is the most important. Because what happens is that from that commitment date, that will in turn dictate really your closing date, regardless or independent of what your contract reads. Now, if you get an offer as a listing agent, or if you're on the buying side, but let's just use a listing agent as an example, and you have a 40-day closing with a 30-day loan commitment delivery date, that loan will not close. The time just doesn't make sense. So if you're on that listing side, negotiate your commitment date. And when you're on the buying side making an offer, communicate with your lender and ask them, what can I put in this contract? Is 15 days realistic? because that's going to be the only way to get to that 45 days or less closing. So if I can tell you to take away anything from the lending side, loan commitment delivery is certainly the most important. Cohesive title and lending partnership. Of course, the mortgage company that you select and the title company you select, let's get the dialogue started now. Let's be proactive. If you're taking a listing this month, or if you're working with a buyer starting now, likelihood is that they're going to start the application process post-August 1. So you want to make sure that your partners are all in line, all in unison, so we feel very little turbulence. Buyer prepared to satisfy all loan conditions in 5 days. As we know, when we get a loan commitment, there are conditions on this commitment. Now, of course, on our side, from the lending perspective, it's important that we communicate with them that they need to return these conditions as soon as possible. We need your support as well. We need to communicate to them that timing is always of the essence, and now more than ever. So it's important that we stress to the borrowers, to the clients, to the consumer, that they return these items timely and preferably 5 days or less to hit a 45-day or less closing. Simply put, use this as a rule of thumb. If all the stars align and the lender does everything perfect, you are at about a 15 to 20 day closing post-loan commitment delivery. So regardless of what you may get an offer on as a listing agent, regardless of how you offer, if you see a 30-day, most agents leave it blank, if you see a 30-day loan commitment, realistically you probably want to add another 20 days. That's a 50-day closing. And that's why the loan commitment delivery part and negotiating that up front, making sure that all parties can deliver at that 15-day mark or less is very important.
All right, lastly, I just wanted to kind of sum up a few important things. So just as Matt was talking about with looking what you need to look for when you're working with your lender, same thing with a title partner. And as you can see, this is really changing the way we do business right now. Now, lenders, as I mentioned under the CFPB guidelines, they're liable for this process. They're liable for preparation of the closing disclosure, which means that they have to approve the settlement agent doing the closing. So whoever you choose for your title company, they have to be vetted and approved, and that's language that you're going to begin to hear a little bit more. Are they vetted? That's something you want to ask your title company. Have you gone through all of the requirements that the government has laid out to be compliant with the CFPB? So that's probably a number one. Right after that is making sure that they've got all the updated software, because this is a totally different game now for real estate. And very interesting is that with the changes that are coming are higher security protocols. Just to give you an example, would you normally say that you get a copy of a HUD-1 to review with your buyer or seller? Okay. With the closing disclosure, you're not allowed to get a copy of it. Why do you think that is? Privacy. The new closing disclosure has all of those different things smooshed together in it, including a lot of confidential information about their loan product. You're not entitled to get a copy of it. That's part of the new security measures that are going into effect. That doesn't mean, by the way, your buyer or the consumer can't approve you getting a copy of it. But the title company can't provide that to you, nor can the lender. And I email it to them. What would you think would be a normal way to confirm that they received it? A reply email? Got it, thank you. That won't work under the new guidelines. The title company and the lender both have to have secure authentication processes where the consumer has to log in and check a box to prove that they received it. So another significant change. Title searches, lien searches, estoppels, all that stuff, the title company can't wait to order that. Your title partner has got to get those things in immediately. And for you, you need to make sure that if you have like an as-is contract, don't wait too long to get that to the title company, because we're the ones that are going to get the ball rolling to ensure we have all of the costs, and the same thing with title insurance, to the lender early on so that they can get the CD prepared. Okay? And that's it.